made 13 investments. What set them apart? What was it that they said? What was it they did? What was it that they proved to you that allowed you to think that they have a 10x, 100x potential and they weren't zeros?
It's partly the team, it's the intentionality, it's the knowledge, it's the expertise, it's the academic or professional backgrounds, it's the grit, it's the qualities that they really show, it's the proof points of execution capability, it's the vision they have, it's the ambition they have. So all these things are things we look at. Then we look at the business model. Do we think that there is defensibility, there is IP, there is a big market, there is strong unit economics? Then we look at the potential impact. Do we think that this company has intentionality, additionality, and whether if we draw the line 5-10 years from now, it can have a tremendous impact?
Welcome back, everybody. Rich Brubaker, founder of Collector Responsibility, here today with another episode of the Mission Driven Podcast. Through this podcast, I'm trying to inspire and equip the next generation of aspiring entrepreneurs, existing entrepreneurs, and the ecosystem writ large. For me, entrepreneurship has been the vehicle by which I've tried to understand, apply, and scale solutions. And through this channel, I'm really just trying to offer up different perspectives around the entrepreneurship path, around the role of investors, the role of academics, and how we can collectively come together for greater impact. In this episode, I'm extremely excited to be joined by Romain Diaz, the CEO and founder of Satgana, a climate tech VC firm on a mission to invest in planet-positive startups, building solutions to the climate and ecological crisis. He's a passionate entrepreneur, investor, and pragmatic idealist, and I've invited Romain to speak about really the current work around impact investing, his work to build a fund with a different model, and speak to some of the nuances around success factors, around where the ecosystem can do better, around how entrepreneurs can come to scale. So with that, Romain, thank you very much. It's really an honor to have you speak with us about the work that you've been doing, the insights that you're seeing, and the entrepreneurs that you're engaging with, funding, supporting. As a starting point, it'd be great to have your personal introduction, but also speak about the mission that you're on.
Well, first of all, thank you so much for having me. Really delighted to be here and looking forward to the conversation. So my name is Romain Diaz. I am on a mission to build a next generation impact investing firm that invests in entrepreneurs who build scalable solutions that can make a difference. And I'm on the mission to find these entrepreneurs and to support them beyond funding so that they can really scale and bring their solution to market.
So what's the background of Satgana, like your founding story, and what's the mission and vision of the fund itself?
In short, we invest capital at the very early stage into companies, startups, and that are quite early in their journey, and then post-investment to really support them beyond capital.
So why did you choose seed, pre-seed type ventures? Like, why go there? Because the risk is higher there. The entrepreneurs tend to be younger. The idea doesn't tend to be formed so well, but why not work on, say, growth phase organizations as your core?
So indeed, it's partly because of my background, because I had been involved in a number of ventures at the early stage, always kind of with a portfolio approach, either advising, investing, or early building. And I really enjoy it, first of all, to really be involved in the 0 to 1 phase, basically. And also because it is widely proven that there's a number of technologies that are already reaching scale, like solar energy, wind energy. About half of the solutions that will be required to get us as a society to reach net zero have not yet been invented, or still at lab scale or at very small scale. So they require early stage investors to support these companies to get from where they are today to scale like solar and wind and all these technologies.
What have been some of the challenges that you've seen around aligning venture with these big challenges at the early phases so far?
One challenge historically of impact investing was indeed the fact that there was this traditional dichotomy between impact and return. This idea that if you were going to do impact, you would have to be concessionary on returns. And for a lot of people, and because of the way our society and our economies are built, there's no willingness to take a concessionary return. Sure. And so that has historically hindered the flow of capital towards impact. For us, the goal is really to show that it is possible to do both at scale in a way that is not concessionary, in a way that where there's no trade-offs between impact and return. And this is more possible because within the impact realm, you have traditionally social impact, governance, and environmental impact. And obviously, as a climate fund, we focus primarily on environmental impact. and there is much more of a case, or it's easier for people, I guess, to realize that the more a solution, a green, so to say, solution scales, the more it can create positive impact and the more it can become successful at scale from a commercial perspective. This becomes a bit easier for people to envision it is possible to do both impact and returns at scale.
At the size of the organizations you're talking to, pre-seed, seed, they're unproven, or they think they've got an idea and they think there might be a market and they think they can have an impact. How do you at that stage assess the potential impact?
First thing that we look at is the intentionality of the founders, and we ask a number of questions and we really gauge and also feel to what extent we foresee the founders as being very purpose and mission driven rather than just being a mercenary that might go into the next jump and the next wave when the next wave comes up, because right now climate and green and so on is cool, but who knows what will happen in 2 years. And then we really look at the business model. Does it generate the incremental impact that the company wishes to have, or is it more like a side effect? And then we also look at ESG factors such as inclusion and diversity. And last but not least, we also look at what we call principal adverse impacts, which are the potential negative impacts that the company can have. So we want to make sure that if the company scales and has positive impact on one environmental metric, it's not going to have a detrimental impact on, for example, depletion of water or increase in plastic. So these are the main criteria from an impact perspective.
Assuming this is a younger entrepreneur, this is a first-time entrepreneur, what are some of the signs that you can tell that, one, they really get it? Like, are they coming from a sustainability background? Are they coming from finance? Like, if you think of those criteria that you put together, who is most aligned to it? Is it the sustainability manager who is tired of working with corporate and has an idea, like they know the issue, but they just don't like the vehicle? Or is it someone super technical who maybe didn't have a background in sustainability, but found the turtle, found carbon, and said, I'm going to apply my tool set towards these?
So we have a bit of both, but in general, we, like most of our founders, have a technical background. Some of them are scientists or engineers and so on. And they have a certain expertise that gives them an edge into building the company and getting it to scale. But our belief is also that working on climate should not be reserved to only technical people and scientists. It should really be for everyone, and there is a space for everyone in this industry or in this new way of doing business. Let's say you need designers, you need engineers, you need technologists, you need marketers, you need storytellers, you need investors, you need basically everything. So there's a space for everyone.
But if the ecosystem itself is just coming together, what's drawing them together? And where are the gaps that you see? Because I can imagine like a pre-growth, pre-stage entrepreneur, like they can use a lot of support. If that support's not there, if it's not efficient, we're going to see more failures. So I'm curious, like as this ecosystem comes together, like where are the gaps that you see? Like which players are really understanding what they need to do and which ones are struggling to figure it out or to figure out how to do it efficiently?
So there's a steep acceleration of talent and capital and players and governance and corporates and so on, with the good and the bad and the ugly. Obviously, a lot of greenwashing and so on, but I think especially Europe is very much aware of this and putting a lot of things in place. We need more funding, we need more talent, we need more of everything. So I think it's just a matter of getting the ecosystem to continue to solidify itself and to structure itself. But overall, I'm very optimistic about where this space is going.
Where are you seeing real traction take place, and what areas do you think are really struggling to find that traction?
My optimistic view is that the impact realm at large is poised to continue to grow for the decades to come. That's very much my hope. Now, within impact, for sure, there are areas that receive a lot more attention than others. Right now, we could speak about carbon removal, for example, having a moment and drawing more and more funding. So it very much means that they will need a lot more funding in this space, which attracts people and trends and so on. Now, within the impact space, there are still areas that are going to be up and down. Like, for example, I don't know, tokenization of carbon credits is something that we've seen a couple of years ago. Now we don't really see companies doing this because of many reasons. Some areas that we need to zoom out and really focus on more. But I think we also have a very resilient and very much the entrepreneurs and the investors tend to be quite, especially at the early stage, quite resilient into spotting new opportunities and spaces. So again, I think it's a matter of time whether these spaces are going to emerge once again.
I think it's very easy to see a lot of people worried about where the world is headed, feeling like they need to do something, and then coming up with an idea. But does having that passion to solve the problem, is that a determining factor for success? How do you as an investor even check your own emotions to make sure that you're looking at something, kind of soberly? Like I know like it's like I want this group to work, but to assess them properly, to assess their investment viability, is that the appropriate way to go at it?
So we need entrepreneurs who tell great stories to investors,
Yeah.
VCs who tell great stories to LPs who manage to convince even the bigger fishes to allocate more capital towards impact based on stories. And the more passionate one is, the more convincing, I believe. And the
Mm,
other element where passion plays a big role, in my opinion, is that when you're truly passionate about what you do, when you're really driven by passion and purpose, it gives you a lot of strength to weather the storm. It's a lot easier or less hard, let's say, to go through the downs as well, because entrepreneurship is a very tough thing. So you go through lows, and the highs are very high, but the lows are very low as well. But when you have true passion and purpose, that really enables you to think long term and to weather the storm and go through the lows and then
mm.
come back at it every single day.
You've seen 1,000 applications, you've invested in the 13 groups. How many of those, on average, would actually come to scale? And what's your role as investor to help them improve the odds of coming to scale?
In general, in the venture space, the common wisdom is that out of 10, maybe 7 or so will go to zero, and
Mm,
one or two, let's say, will go to time 1x or 2x or 3x. So reasonable success, but not what you look for as a venture investor. And one or
right.
two will do 10x or 100x. And those are the people that we try and invest in just from a portfolio construction strategy. And our role is to spot these entrepreneurs that have the potential to do 100x. And then once we select them and we invest in them, it is indeed to support them. So we try to
Mm,
connect them with our LP base, for example. We have 130 or so LPs, investors into our fund. So we try to
mm,
map to opportunities within our LP base, which can be potential customers or connection to potential customers, corporates, and so on. It can be connections to potential investors, connection to talent, strategic and operational expertise. We have unicorn founders, impact investors,
mm.
successful executives, etc., scale-ups, etc. So we can really match our entrepreneurs with some of our LPs who are willing to really support and go beyond the financial investment.
If you think about the firm, I mean, when you're looking at these applications or these pitches, you're trying to figure out, is this a zero, a 0 to 1, a 10, 100, and you've made 13 investments, which I'm going to argue based on what you said, you believe they're at least 100 plus. Like you think that they're going to be really strong. What set them apart? Like, what was it that they said? What was it they did? What was it that they proved to you that allowed you to think that they have a 10x, 100x potential and they weren't zeros?
It's partly the team. I mean, that's the first thing that we look at is the quality of the team. So it's the
Mhm.
intentionality, it's the knowledge, it's the expertise, it's the academic or professional backgrounds, it's the grit, it's the qualities that they really show as an entrepreneur. It's the complementary of the founding team, it's the
Mm,
proof points of execution capability, it's the vision they have, it's the ambition they have. So all these things are things we look at in entrepreneurs. Ideally,
yeah.
co-founding team. Ideally, I find that the best co-founding team is typically a CEO and a CTO. There can be many different other configuration, but in general, I find it very strong. Ideally, gender balanced, and so that's the first thing that we look at. Then we look at the business model. Do we think that there is defensibility, there is IP, there is a big market, there is strong unit economics, and so on. So we look at the business model and the commercial aspect. Then we look at the potential impact. Do we think that this company has intentionality, additionality, and knowledge of the impact, positive impacts and negative impacts, and whether if we draw the line 5, 10 years from now, it can have a tremendous impact.
And if you were generically to look at the portfolio companies, what are some common challenges or some common gaps that they face as they're going from pre-stage to, say, provability to growth phase?
Access to funding is always a big one, obviously, even if there's more and more funding, but finding the right investor for your stage and your state of development and needs is always a challenge, obviously. Growing fast enough in terms of the different milestones, whether it's on customers, revenue, or even technology, is always obviously a challenge. And I think it's also part of the entrepreneurial mindset to be optimistic and oftentimes too optimistic. It's rare that entrepreneurs are not optimistic enough about what they can achieve. And so oftentimes you have to catch up with that.
Yeah.
And access to the right talent, I guess, is also the big one because these companies are made of people, and having the right people that have really the right incentive and long-term outlook and skills and willingness to make it happen is always a key success factor.
And when you've put the money into them, is it your responsibility then to help them address those issues?
It's a very good question because there's different kind of investors. There's some
Mm,
more basically spray and pray. There's a lot of investors that have many shots on the goal, but obviously that also means that if you have 300
mhm.
companies in the portfolio, you just don't have time to spend time with them and to really support them. So it's more like
Right.
I'm going to hope that one of them goes to unicorn. But usually, if you have limited funds, which we'll do, it also means that you have less ownership because if you invest in 300 companies, you typically invest less capital, which means less shareholding, which means less impact on your returns. So you might do an IRR of maybe 10% or whatever it is, whereas if you have more of a concentrated portfolio, which is what we're doing with our fund,
Mm,
with Satgana, we have a goal to invest in 30 companies. So it's fairly concentrated. It's not the most concentrated. We feel like it gives a
sure.
good enough diversification, but it's still fairly concentrated. And we also intend to do follow-ons, meaning we reinvest into our winning companies. That means that you can have more ownership into startups. You can have more time to invest in each of them and to really support
Mm,
them. But it also means that if you don't make the right calls and you don't support them properly, it can also go to zero much more easily. But it can also do a 10x fund, which with an index fund or
yeah.
300 startups is virtually impossible. So it's about finding the balance. It's about finding what your own edge, what your own strategy, what your own liking, what you sell to your LPs as well, and in the
Mm.
end, what your unique value adds.
If you're talking to entrepreneurs, what are two or three pieces of advice you'd give them to really position themselves for success, for scale?
So it's
Mm,
important to be realistic about your plans, be ambitious and realistic, but at the same time, really think long term because it is a very long journey. Can you see yourself doing this for the next 10, 15 years and grow with the company? Because that is what it will require
yeah.
to really get a company to scale. So that's the first advice that I give to portfolio companies and to entrepreneurs in general is can you see yourself doing this for the very long term? And because it will require a lot of strength and stamina and perseverance and resilience to navigate the lows mostly.
How many of the entrepreneurs you talk to and you tell them that are they ready for it? Like, do you think that they really understand the path that they're about to undertake?
Most first-time entrepreneurs don't, but maybe it's also a blessing. If I even think of myself, so I'm an investor, but I'm mostly an entrepreneur building a next generation impact firm. So, and I really did
Mm,
it from scratch. Like there was nothing, there was no track record, no brand, no company, no funds, no nothing basically. But that's very much an entrepreneurial journey. And if I look in
mm.
hindsight 4 or 5 years from now, I very much underestimated what it would take. But I see it today as a blessing because had I known, I'm not sure I would have done it. So maybe it's also a good thing.
Where do you see impact going forward the next 5 years as the last question? Like, what are the things that you want to see change so that greater scale can come over the next 5 years, 10 years, 25 years?
I'd like to see even more proof points that it is possible to go beyond the dichotomy between financial returns and impact so
Mm,
that it becomes more and more of a no-brainer that even at the individual level, it gives us a lot more sense of purpose. So I think by the time that we really show that it is possible at scale and that the debate even becomes worthless, that will have
mm.
a lot more capital flowing into the space and that people will even say, what's even the point of this virtual thing that we call money if it's not to create a better world?